President Trump has called the $1.5 trillion tax cut that Republican lawmakers are on the verge of passing a Christmas present for the entire nation. But the fine print reveals that some will get a much nicer gift than others, the benefits will change over time, and some will be left out in the cold. Real estate developers and technology companies could see big tax cuts, while low-income households and people buying health insurance could lose out. With the bill finally headed to a vote this coming week, taxpayers are scrambling to determine whether the legislation renders them winners or losers. President Trump and his family's numerous industries will benefit from the Republican tax overhaul, but perhaps none as dramatically as the industry where Mr. Trump earned his riches, commercial real estate. Mr. Trump, along with his son-in-law Jared Kushner, who is part owner of his own real estate firm, will benefit from lower taxes on so-called pass-through income, which is money earned by partnerships and other types of businesses whose income is passed through to its owner and taxed at the individual tax rate. Mr. Trump and Mr. Kushner benefit since they own properties through limited liability companies and other similar vehicles. Under current law, that income is taxed at rates as high as 39.6%. Under the bill, much of that income could be taxed at a rate as low as 29.6%, subject to some limitations. Real estate also avoided new limits on interest deductions and retained its ability to defer taxes on the exchange of similar kinds of properties. The benefits of lower rates on pass-through income will extend to Mr. Trump and Mr. Kushner's partners at real estate investment trusts as well. At the last minute, lawmakers added language to make it easier for real estate owners to avoid some of the pass-through provisions restrictions and maximize the tax benefits even more. Big corporations industries like big retailers will benefit from the new corporate rate of 21%, since those companies pay relatively close to the full 35% rate. Other aspects of the corporate tax cuts will be enjoyed by an array of multinational industries, particularly technology and pharmaceutical companies, like Google, Facebook, Apple, Johnson & Johnson and Pfizer. Such multinational companies have accumulated nearly $3 trillion offshore, mostly in tax haven subsidiaries, and touched by the United States tax man. The tax bill will force those companies to gradually bring that money home, but it will be taxed at rates ranging from 8% to 15.5%. That's far lower than the current 35% tax rate on corporate profits and even lower than the new 21% rate. Plus, American companies will no longer owe full corporate taxes on future profits they say they earn abroad, providing more incentive to push income into tax haven subsidiaries. The law even includes provisions that could encourage companies to move workers abroad, despite pledges to do the opposite. Multimillionaires, an exemption for estates that owe what Republicans call the death tax, was lifted to $22 million from $11 million. That doesn't matter much to billionaires like Charles Koch, but means a big tax cut for people with estates worth tens of millions of dollars.